All right, it's time for a podcast again with Fredrik, and today's guest is also Konar. Welcome to Invest in You. So today we were going to talk about lending, and we're going to talk about alternative lending and some terms that you might not have heard before. If you're a specialist in rising finance, there might be something in it for you as well. I got plenty of experience in this space, and so does our guest also. So he not only has got its own show about loan brokering, he's also an entrepreneur, and he is helping other people to understand the space. Of course, he also knows how to spread the world. But more about that later. So, welcome. How are you today?
Great. Thanks for having me, Fredrik. Great to be here.
Absolutely great. So, how do you respond to the super boring question like, what do you do? The short
I get
version.
it all the time, even
I
from my
know.
parents, right? After doing it for like 10 years.
Exactly.
So we drill it down to, I guess, you can say the elevator pitch. We help people break into the alternative lending industry.
Yeah.
And also, we also help businesses get access to the capital that they need. So our business has two sides to it. One is the training side. As you and I were chatting before you hit the recording, is that this is a very little known industry and there's massive demand once people understand, and the demand is twofold. Either A, they want the funding, or they
Yeah.
want to make money with the alternative lending industry. So we cover both ends at our company called Business Lending Blueprint.
Yeah. And why this really matters for you, the audience. Most people would like to have access to finance at some stage for growth, to get out of a big hole privately with a business. So with all of that in mind, often companies run out of capital because they're not proactive. We're going to also stress the importance of doing this in time before you're in that dark hole, alone and without money. And also
Yeah.
very much in the space with quality businesses and business finance. So again, can you elaborate what does the term even mean, alternative finance, and why is it there?
Yeah, the term
Or alternative lending, yeah.
gotten this like I guess it's gotten famous right after 2008 recession. It
Yeah.
existed prior to that, but no one really knew, and it kind of almost drilled down to one product, like merchant cash advance or like hard money lenders.
Yep.
But it was such a huge recession. After that, what had happened is, besides the real estate bubble and all that, like the public side of what people know, but what people might not know as much is the banks completely restricted funding, especially the small businesses, right? The problem with that is, if you talk about a country like US, about roughly 70% of the entire economy comes from small businesses. And when you restrict funding to them, they just need to find another way to do it. The demand doesn't just disappear, right? There's
Yeah.
massive demand, they need to channel it. So it started enforcing the alternative lending industry to even get more creative. That led to like an explosive growth, like a few years of, a few 100% growth. And then alternative lending became like this super niche to like now there are so many different funding options out there, starting from like I don't know, micro funding of 5,000 all the way up to, it could be even as high as a couple of 100 million,
Yep.
right? So since starting from 2008 until now, it's been a crazy journey. And people, especially small businesses, have gotten, better at adapting to this. Before, they didn't even know it existed. Right now, for unfortunately for the banks, they're doing a horrible job in their reputational management, right? So people do not like their banks as much, which
Yes.
wasn't so much the case before they were bailed out in 2008. That helps to alternative lending. So people are okay with looking at different options. It could be peer-to-peer funding, hard money, or even like SBA. So we can bundle a lot of stuff into like alternative lending.
Yeah.
So the
Exactly.
definition of it is anything alternative to bank lending is considered our space. And
Yeah.
as you and I know, it's been expanding quite a bit, not because alternative lending is trying to expand it. It's just there's more demand than ever before. So that's what's happening in the space.
Really cool. So for those of you still on the fence, wondering like, should I listen to this podcast or not? Here are a couple of things we'll talk about. So among the themes will be why still businesses get rejected for getting funding. We'll also talk about what makes a company fundable. Going to talk about when alternative lending is smart and when it's stupid. We'll also talk a bit about leverage of capital, how it can help you, and also how it can sometimes rescue your business as a whole. And then we'll talk about, and hopefully we'll understand that this can actually be a business in its own right and a smart model. I've been on multiple boards and running business like this as well in many parts of the world, and also as well is teaching people how to do this. So hang in there, grow with us, learn with us, and with that, I'll jump into the first proper question for you. How did you learn about money in business, and was it a hard or easy way for you?
Yeah, so most businesses learn the hard way, trial and
Yep,
error, right? So like the school system doesn't teach you unless you came from a rich uncle or
yep,
family. You
true.
don't learn the principles about money. And you actually, in contrary, you grow up with a lot of advice that's wrong. Money doesn't grow on tree. Money could be evil. So many people have this really conflicting relationship with money, especially in the US. At the
Yes,
same time, they're trying to make more money. As you can see, that creates massive conflict in your persona, in your identity. And then you reach a certain age and you're like, all right, shoot, I need money and I need to make money, right? And then they either go into the corporate route working for someone, but usually that takes you to like your 30s and you find out that, oh, I've been climbing the wrong tree. I'm talking about the entrepreneurial people,
yes,
right? So being an entrepreneur is not for everyone, obviously, because you're taking a lot of risks. Sometimes you're quitting your 40-hour per week job to work 100 hours a week, right? So just the
yes,
total madness part. But I think a lot of that is rooted in not understanding the financial literacy. And my personal story is I'm an immigrant. I came from Turkey when I was 17 years old. My father had been here and he was failing on a business. Although he had a great skill set in what he was doing, he didn't understand the money part. He had to file for bankruptcy. That created a
yep,
lot of trauma on me because I came from like a middle of Turkey, which is basically a lot less developed than the western part of Turkey, right? So money was not even a conversation to start with.
yes,
It's not like I knew about it, but the whole idea of my family's business falling apart, us being in debt and owing money to IRS and all of that kind of stuck with me through college. And I did something totally different, like double major biology and chemistry. But it was always on the back of my mind, like, why did this happen to me? And it might have happened to you, Frederick, too. When you go through US and travel, you
yep,
notice how much money there is. Like there's
yes,
incredible amount of money. Then it makes you even question more like, are we just stupid? Like we don't have the intelligence. Then you
yep,
notice that it's not it. Like it's the financial literacy is a problem. Like it's like a pandemic level issue. People just don't understand. And then they start learning from people who do not preach entrepreneurship, right? So you go through Dave Ramsey talks about cutting your credit cards and
yeah.
saving money,
Save, save, save,
and
save.
that
Yep,
yeah, save, but you can only save so much of the money that you're making. If you're making 50K, unless you completely stop eating, so you're not going to save a whole lot, right? Entrepreneurship is the opposite of that, taking risks, the understanding good debt, where do you use the debt, and how do you grow through a debt and things like that. So it has been my personal transformation that led me to get into the teaching industry because I noticed that, yeah, becoming a loan broker, alternative lending is nice and dandy, but people don't understand even fundamentals of how money works. Like if you look at the $1 billion companies, you and I were talking about it. A lot
yes,
of them grow through smart debt, but the average individual is talking about I shouldn't use my credit card. That's like a big gap, right? If you want to build wealth, does that
yep.
make sense?
Yeah, yeah, completely. Yeah. So on the way to this call earlier today, I met up with a business owner, a founder of a company. Here comes the dilemma. He's been running his own company for 20 years, but he's running
Yeah.
the company as an employee.
Uh,
So you're the founder, you take all the risk, but you basically do this so you can have your own salary without thinking how to build like legacy values,
yeah.
how to build the balance sheet, not only looking on the results and survival today. It is painful and frustrating because there is so much more than just as the owner, as the founder, as the entrepreneur to get a salary. Most entrepreneurs who get this right, most of them don't even get a salary at all, or very, very small. The minimum, which is
Correct.
like tax free, and then the rest they draw in other benefits instead. So, reflection on that one before I throw the next curveball on you.
Yeah, I think there's a major confusion between a small business owner and entrepreneur, right?
Yep,
Even that definition is really, really blurry. A lot of the
good point.
people, many people quit a job to have a job that they own, basically, right?
Yes.
So, like, I have an electrician who's been doing this job for like 30 years, and he's getting a little older, his back hurts and all that stuff, and his main complaint is like, as I had a great business, but I got to do the things for things to happen, right? So he doesn't even have the retirement plan because if he stops working, money stops coming in, right?
Exactly.
So when you think about it, there is a problem with how we define things in small business. Like you said, entrepreneurial people are trying to build on organizations that can thrive and grow even without them. So they have the controls in place, the team in place, the SOPs. Most people treat it as like a small business. If I want something done, I need to be there type of thing.
Yeah.
Unfortunately, that's not the level of entrepreneurship you and I are talking about, right?
Yeah.
And
No,
then
exactly.
and it's not late for people to figure it out, but it's a lot harder to break those big, old habits to switch from a small business mindset, which is a job that you own basically
Yeah.
under
Exactly.
your name. A lot of times it's more risky than holding a job because there's no benefits and things like that. You have to figure it out all out. But what we want to promote and help people propel on is actual entrepreneurship, like not focusing on what you can get paid today. Obviously, you have to eat, but what are you actually growing? Like, what is the end game? Where does this go in 10 years, 5 years, 20 years from
Perfect.
now?
Yeah, perfect. So you shared, and thank you for sharing your family's backstory and also how different the thinking is between the generations, pushing you into the money world of money, so to speak. Was it an opportunity or was it frustration? What was the biggest driver for you?
Great question. So it started out as a frustration that turned into an opportunity.
That's a good
So I
point.
graduated from college, and my options were to go to medical school or make money. And I didn't know enough about both any of the options. My guidance counselor told me you can go to medical school, but you're going to end up graduating with a debt of about 250,000 or more, right? I said, I'm tired of this. I got to go figure it out. And I was reading books in a library. They said the best job you can get is sales job. So I got into sales. I was selling all kinds of things, and then I ended up in New York City,
That's
which was an
good.
eye opener for me. Like as it would happen to you too, the amount of money, like the hedge funds, people with money, like what I considered good
Yep.
money was like peanuts to these people. They would have just spent it on a dinner. I'm like, what is going on here? There's
Yeah.
a totally different dimension that I don't even understand, right? And then I came across a guy who's in the alternative lending industry selling loans, and he wanted to partner up because at the time I was selling stuff to restaurants. He's like, why don't you refer me some restaurants? Which, as you know, was like relatively easy to fund. Let me just offer funding to them, which will
Yep.
help you sell your stuff, and I'll give you a cut. I'm like, okay, whatever. I referred him some customers. That's when I noticed how lucrative that was. Literally the week later, he handed me a check for $4,000,
Yep.
which is the largest commission I've ever made in my
Yeah,
life. I'm like,
exactly.
hold on a second. How did this happen? Is this an accounting mistake? Or
Again,
like,
please.
yeah, like how is this my cut and you made money and the merchant made money? This
Yeah.
doesn't add up, right? And as you can imagine, anything with someone half the intelligence would jump into that one. Like that just
Yeah.
makes sense. And that frustration of me trying to figure it out what to do with myself turned into this opportunity. It's not like I was preparing for it, I was researching. It's just I had this hunger to figure this out. Because in my mind, I kept saying, this is not fair. We
Yeah.
had to know about this stuff. This is
Yeah,
not
exactly.
fair. How do I not know? And Fredrik knows about this, and he's like 20 years ahead of me, and we're in the same freaking country, right?
Yeah, exactly.
And then
Yeah.
when it opened the door, then as you can imagine, I never looked back. I'm like, all right, this is it. I got to know about this. And when you start learning about this, then your feeling of unfair even goes through the roof to other
Yes.
people. Like more
Yeah,
people
exactly.
needs to know about this, and you talk to people and they have no clue. They go through life, and at the time I was like in my 20s, I'm talking to people in their 60s. They literally have no clue. They blame the government, the God,
Yeah,
the
exactly. Yeah.
nature, whatever.
Yeah, no, I quite often have this kind of conversation with my dad, and the stuff I know now, he still has never figured out, and the stuff that I taught my kids who are now in their early 20s, they are already financial smarter than I was when I was 35. After
Wow.
multiple business degrees and running companies for years, they're already there and they're in their early 20s. It's crazy. It's not fair, but it's good for them.
It is definitely about having an unfair advantage. Unfortunately,
Yeah,
you and I will
exactly.
try to save as many people as possible. But at the end of
Yeah,
the day,
exactly.
if you want to be at the top 1% of the income bracket, you got to know
Perfect.
stuff and apply on stuff that other people will never know. It's not about hoarding information.
Yep.
It's just some people are not even willing to listen. That's what it comes down to. Like they're just so set in their ways. You just got to find the right people to kind of get under your wings and help them understand. While you're doing it, you'll make more money too.
Yeah, exactly. And the cool thing is there is so much access. So this is one of the podcasts out there, which is very much for the people who like to be part of the 1%, because everything from acquisitions to raising finance to everything else, it is, if you apply it, you will be part of the 1%. But that
Yes.
is, you need to do the doing. So there's too much information out there. So you need to filter and cut through. And you can have your billionaire mentors, but it's usually better to have someone who's closer to the earth, who's closer to you at the moment. It might ideally be just 1, 2 steps ahead, and usually more helpful than someone who's way too successful, because it's really hard to untangle and do what also is doing to teach the steps and make it understandable. So with that in mind, why do so many solid businesses struggle to get normal bank funding?
Because I guess the game is rigged against them. Like small
Yes.
businesses, when you think about like why a bank would provide funding to small business, they're not just designed for it. They have their balance sheet, they have their investors and things
Yep.
like that, and providing funding to small business mostly uncollateralized doesn't make sense for them. So
Yes.
they have the funding options, but if you look at who they fund, usually they're mid-sized to large-sized businesses with like a board of directors, physical locations,
Yep.
factories. There's massive collateral. And if you decide to start your deli around the corner and you need to buy a fridge to get it going and it costs 20,000,
Yeah.
bank would have no interest in funding you like that. That
Exactly.
it just doesn't. That's why like it's not because of something you did. It's just you're just not going to get it most of the time unless you jump through the hoops. You've been in business. For small businesses, it's almost like you can only qualify for funding if you really do not need funding type of thing. It's like it's
That's exactly
designed
it.
that way.
Yeah, which is the best way to explain. Like, if you don't need the money and you do have the collateral, that's when you will get the funding.
Yes.
And the opposite, when it goes downhill, and you might be lacking the collateral, or you might be in the wrong kind of industry, like restaurants, coffee shops, is a mess because their lifetime is very short. So, what does actually make a business fundable?
Yeah, like if you look at there's like the most common business people start at restaurant and coffee shops.
Yeah.
You have a couple of things going against you: the highest failure rates, and
Yes.
also there's very small profit margins. Like if you go to
Yeah.
New York City, 5 to 15%. So anything that knocks you down for a month literally can put you out of business, no matter how fancy of a place that you have, right? So that's the type of industry that you're in will matter a lot, right? If you're starting, like the do not, I don't want to say do not start a restaurant or coffee shop, but know that you're swimming against the current. Like
Yeah.
you might really be passionate about cooking cookies and you might have the best one, but it's only the beginning. There's a lot more. And you're willingly getting into an industry that no matter what you do, the profit margins will be extremely, extremely low.
Yeah.
So
Exactly.
versus choosing the type of business that you start is an important factor, right? So if you can look up what businesses are more profitable, that's one way better to start. And the other thing is honestly having relationship with some alternative lending options that you have. Like it could be based on your credit score, it could
Yep.
be building business credit, it could be knowing people outside of your PNC bank representative, because they're there to get your checking account but they're not there to give you any money back, right? So having those relationships will not help. Like
Yeah.
having a backup, even if you're in the high risk industry like that, you want to make sure that you get qualified for a business line of credit when you do not need it. Like usually for a restaurant, the first 2-3 months is really, really good because you're a new spot and then
Yep.
people want to come check you out. That's the time that you want to get some kind of business line of credit approved. So when
Yes.
things start going downhill, at least you have a backup. Because as you know, many food businesses do not go out of business because their food sucks. It's because they run out of money. That's just
Yeah.
why how it is.
Yeah. Exactly. Yeah. So therefore, what do people do wrong when they're looking for money?
Well, they do not know where to look. That's the
Yep.
first thing, right? They waste a lot of time because think about when you need capital. Either something breaks, you need to make payroll, or you need to expand. So more than the capital, time is of essence. You need to get the money in a certain amount of time. And what I noticed with small businesses is that let's say they put in their application to Wells Fargo, the processing alone can take 4 to 6 weeks. You don't have that. Like you're just waiting for the money to come in, right? So that's the first thing you do wrong. The second thing is that immediately you're buying stuff for your business, try to utilize credit that reports to your business credit. Like don't just put everything in your personal credit card. Try to get business credit cards. Try to grow that credit that's independent of your personal credit, because that's going to
Yes.
come handy 6 months, a year from now. The third thing is try to have consistency in your branding, meaning that let's say you start Fredrik's coffee shop, right? Make sure that name is same everywhere. Like it's not like Fredrik's LLC one place. It's
Yep.
not coffee shop. So you need to, when a funding institution looks at it, they should check other metrics, not just your credit score, your online presence. I see companies, their name, they have like 7 variations of their name. That's
Yep.
not going to help you. Like streamline that process. Those are like the fundamentals that you can start with, especially for a new business. And if you're like already in business and your Google says Fredrik's Coffee Shop LLC, the other says something else, go change it. It's okay. Just update it. But that
Yep.
congruency, it will help. And start getting help from people who understand the funding game. Like maybe get
Yes.
coaching a little bit. Like what do I
Exactly.
need to do to get ready for it? You
Yep.
never want to get emergency funding as much as possible because that's when the money is going to be more expensive. Is
Yes.
it needed? Yes, it's a necessary evil. But knowing that, always assume that you're going to end up in that situation and prepare for that ahead of time. Don't cross your fingers and hope that I will never need money.
Yeah,
That
exactly.
rarely works that way.
Yeah, so if you just go back a few episodes on the Investing You the podcast, I did an episode which has got the title like private credit, and that is
Mm,
talking about like the biggest institutions are also doing this. So, for example, BlackRock, Blackstone, and in the UK, I also mentioned like Black Owl and a few others. They are doing this on the institutional level. Why? It is good money. It is giving money to people who might struggle to find it normally, and it's also a good cash flow strategy for the people who actually hands out the money. And that's why many people really like it. So let's explain what does alternative lending even mean. So you got lenders and you got borrowers, and they
yes.
both have got different requirements and so on. So how do you fit into this? I love when I explain this to my sons, like you're a piece in the puzzle. You're connecting the opportunities, the money on both sides. So please explain this so people can get a grasp of it.
Yeah, great question. So we call it like financing matchmaker, right?
Yes, exactly.
So you have people who need the money,
Yes.
there are people who have the money and they want to make more money through their money. They want their money to make more babies, right? And
Yep.
the only way for that to happen, they need to deploy that money with a higher return than it costs them, like
Yes.
whatever that interest rate is, factor rate is. The difference to them means a lot of money. So what people need on this under this group, these we call it lenders or private equity people or whoever, someone who has the money, is they need people who want the money.
Yes.
Thankfully, in the United States, the demand for money is like ginormous, right? So
Yep.
millions of businesses do need it. So let's look at this side. Small businesses or startups who need the capital, they have very few options. And they need the money on the early stage of their business. So as like the middle person, like we are and our trainees and whatnot, you just place yourself in the middle because a lot of these lenders and lending networks, they're not usually in the marketing business, right? They don't want
Yes.
to create a funnel. They don't want to train their own brokers. They just have like family offices. Sometimes they have the money, they look at
Exactly.
the numbers on a spreadsheet. We need to deploy 10 million, we're going to
Yep.
make back 14 million. They just want to deploy to 10 million. So as
Yep.
the business loan broker, you become the liaison between these two people because these business owners do not know who funds the money, and you become the matchmaker, financing matchmaker. Ask the right questions, match it to the right lender, and you
Yep.
make a piece of the cut, which is
Exactly.
one of the oldest business models ever existed.
Yeah, exactly. Yeah, so I've done this with IT platform in the middle. So think fintech. So we're doing
Yeah.
exactly what Ozzy has explained, but virtually. And there are lots of companies doing this to both individuals as well as to companies, and that can be on either side. And then you got what I did in the UK. If you talk like from people to people, peer to peer, same thing there, just matchmaking, or more like industrial scale as well. So they're all the same model. Ultimately,
Mm-hmm.
exactly like Osti explained, you got borrowers and lenders and someone who's matchmaking and fixing it in the middle. So when is
Yeah.
this smart and when is it expensive slash desperation? When should people avoid it?
Yeah, it's like a moving scale, right? So faster you
Yes,
need the money, more expensive it's going to be, especially if you
exactly.
don't have the collateral.
Yep.
Because I know people never, no one wants to get expensive money, but I always tell people, if you were the lender and if you had $1 million sitting in your bank account, would you have funded yourself given the risk profile, right? So if
Yes.
that was your money coming out of the door, going to fund the business, if you were to fund yourself, what kind of price tag would you put on it? because
Yes.
there's a lot of risk. You need the money. The savings accounts are drying up.
Yep.
You have an emergency. So like getting the money, like we do funding every day, right? Sometimes we can put money into somebody's account within 24 hours. That's like almost doesn't make sense.
Yeah.
So then that you have a few hours of underwriting, basically. You got to do the funding call and deploy the capital.
Yes.
Of course, that's going to be the most expensive form of money.
Yep.
When it does not make sense for you to get it, if you do not actually need the money that urgently, you have to ask yourself, do I really need it today? Or do I really need it at the amount that the funder is offering? If you need 20,000, let's say they're offering you 100,000, you're going to have to pay it back with interest, like factoring,
Yep.
right?
Yeah, exactly.
You really need that 100,000 right now. So it's like, I know the money seems very attractive to people that are like, oh, I get qualified with 100K. I'm going to take 100K. Yeah, but you're going to have to pay it back. And usually it's like short-term funding, right?
Yeah,
Are
exactly.
you going to be in a position to pay it back or not? Like simple like numbers check is one thing. The other thing is like, how do we end up in this situation? Why did this happen? Let's say this is an emergency you fixed. How do we make sure it doesn't happen again so you don't get into the cycle of stacking merchant cash advance deals,
Yeah, exactly.
which is like a downward spiral, right? One time is okay, emergencies happen, something breaks and you need to fix it. But then you got to learn from that and say, prepare yourself for the next phase of the business. So I don't mind people growing through debt. As you know, that's a great strategy to do it.
Yeah.
But many people look at it as like, oh yeah, I hope I get approved. Well, hope is not a strategy, right? So it's coming at a cost. But if you build it into your model, I've seen people who take $30,000 cash and turn it into $500,000 because they put it in a marketing channel, they have a plan. Then when they get to that level, they get approved for better financing options like a business line of credit or SBA. Doesn't mean that you never take money, but you got to be smart about how to do it. And the questions are those two questions. How much do I really need? How fast do I really need it? And when I get this money, will I be able to pay it off? What's my plan with the money? Like, do I really have a plan?
Yeah. So if you're in real estate, you might have heard about like bridge finance. This is a little bit like bridge finance in a way. So yeah. So put on the hat of the borrower, and what are the red flags to look for when deciding who to work with and who might want to give you money? What should people stay away from as a
Yeah, that's
borrower?
awesome. As a borrower, so when I'm thinking on myself as a borrower, I would want to know if the person I'm working with has actually access to multiple funding options. You don't want to work with a broker that they only have one product and it's usually the most expensive product and they want to shove that through your throat because that's all they have. But we see it all the time. I'm like, wait, why did you set up this merchant with a merchant cash advance? They could have just been fine with like an equipment financing or
Yes.
invoice factoring and things like that. So as the merchant, as the borrower, you need to ask the question, what other funding options do you offer besides this? And why do I not qualify for those? And kind of do more research on that one instead of just signing the dotted line because you need to that's your business at the end of the day. Whoever is the broker is, they're going to be happy with their commission. They're going to fund you, obviously. But, you know, going back to how my father was, if he knew how to ask the right questions, the business could have been a different space, but he just didn't know, right? So as the business owner, don't look at just the offer on the table. Always consider what is not on the table, maybe, and go through your options to decide maybe that is actually the only offer. But at least you know that that was your thing. And for the next funding round, you can figure out how would I qualify for the better option. But if you don't know, then I see many people getting stuck in one funding option.
Yes.
They do rotations every 3 months, which is a dangerous cycle.
Yeah, I like to raise another red flag here, which is like the terms and conditions. I
Yeah.
have come across lenders that has got as a business model that in the terms and condition, basically, yeah, you have got this high rate that you sign up for, but if you default just by missing the payment by a dollar or a day, you jump into the next level, which might be 2-3 times as high as the super high. And now you're in very much a death spiral, which often with the terms and condition means that they can take over your piece of real estate, your land or your company and the control of the business very quick. So fast you don't have time to find other money somewhere else. So the terms and condition can be really a massive red flag. And many times I've stayed away and not signed the dotted line because ultimately this is set up
Yeah.
to take my stuff
Yes.
if ever I would mess up. So yeah, big red flag.
That's awesome. That's a
You were
good one.
nodding there. Any comments?
Oh, 100%. Yeah. You need to, you don't want to be sold a package without understanding. Understand that whoever is presenting, they're a
Yeah.
salesperson. They want to make commission, which is fair. We all
Yes.
come from sales and all that stuff. But like you said, at the end of the day, you don't want to sign up for something that's like 10 times bigger than you thought it was down the line, because this is
Yeah.
a business. Like it usually follows Murphy's laws.
Yeah.
Anything that
Exactly.
could go wrong will go wrong at some point, right? Like when you run a business, you got to think about the worst case scenario. I didn't think about the terms and conditions. Like what happens if you have one late payment, or like you have to restructure your debt and something happens. We've seen this happen during the
Yeah.
pandemic, right? A
Yeah.
lot of
Yeah.
people call to restructure their debt, and they kind of have woken up to the fact that, wait, is that what happens when I call? Like, and then you got to be careful, right? So you got to
Yes.
ask those questions. And this is where I'm glad they're watching shows like yours, so they're educated. We're not. I don't want people to misunderstand. We're not anti-debt. We want people
Yeah.
to
Yeah.
get
Yeah.
debt to grow
Yeah.
through that, but do
Exactly.
it right, so your survival just expands, because we want small business to succeed, because if they succeed, you make a lot more money, I make a lot more money, we don't benefit from it. And I
Yeah.
don't want to
Exactly.
scare people away from debt. It's just do it the right way, so it actually it propels your growth a lot faster.
Yeah, no, I completely agree with that as well. Like this traditional term, good debt, bad debt, it can be like it. What you're gonna use the money for? What's the purpose? Which ultimately
Right.
makes it easier or harder for you to get the funding in the first place. What is the purpose of you getting funds that can
Mm-hmm.
lock or unlock uh, the potential to get the money in the first place?
Very true.
Yeah, all right. So I know that from the pre-call that you're a little bit of a hybrid. You might not want to share all the details, but in terms of you helping other businesses to access capital, or why not just raise money and use it yourself?
Raise the money, use it myself.
Yeah, exactly. Yeah. Why would you raise it and help other people? So being the piece in the puzzle or not piece of the puzzle and take the money, which is
Yeah,
tempting and
it's a great,
impossible.
I think that's an honest question. It comes down to, like you and I talked about earlier, is that what are you trying to accomplish? If the
Yeah.
goal is to just make a little more money, that would make perfect sense, right?
Yeah.
So I know I understand industry. I would just raise capital for myself and call it a day. But if the mission is way bigger than just me making money, like in the alternative lending industry, we did a comparison between insurance industry and real estate industry. Because people usually ask, like, is this a saturated industry? When we did the math, there's about 20,000 business loan brokers in US,
Yeah.
right? In comparison, there's about 3 million real estate agents. And then last year, I think the total number of properties sold in the US is about 3 million. It's like a 1-to-1 ratio. And then the amount of businesses funded in the US is in millions and more. So there's no way that I single-handedly, yeah, I would make myself more millions maybe than I have, but then it's not going to grow an industry. So we want to make it cause a movement. So at the end, so our business is not a small business that this dude Oz runs, but
Yep.
it creates the ripple effects. And also, I don't want a 17-year-old like I was, not knowing why his family's finances are failing, because I take that personally. I was personally offended by at my parents and also at the system of why you didn't trade. I've been through. I'm a product of the school system. So you took me under your wings and you took me through college. You didn't teach me any of this, and I don't know this, and I come out as if like a little kid, not understanding how that works. So I think that's it. We have a bigger mission than that. And along the way, don't get me wrong. Yeah, we want to make money. We want to grow.
Yeah.
But there are two ways you can grow. We can be like you said, I talked to Fredrik, a bunch of other people, raise capital. We have enough proof of concept. But then I'm just personally making happy. But I wouldn't feel like I'm a part of a mission, helping other people grow and understand. And there is this is alternative lending is a pie that it grows as you share with more people.
Yep.
I truly believe that it's going to keep growing no matter what happens. Like people ask questions about AI. I think AI is going to help propel, because people are going to seek human relationship. Funding is going to get faster and easier. The underwriting. So I
Yes.
think we're barely scratching the surface now.
Yeah, no, I completely agree because you can automate many things, but you still like human in the loop for underwriting kind of makes sense and so on. And I can see how this is an attractive space, like you said, like the ratio between number of people who are using brokers versus going direct to banks. And also, I think we're expecting some tougher times. Again, people will look for options, and yeah, it's in the title alternative. So
Yeah.
goes without saying. Yeah. So coming back to like the business model here, I know that you also help other people to understand and get into this kind of business. High level, why is a loan brokerage attractive as a business model, like high level?
We want to attract people who already work hard, right? If you're a couch potato, nothing will make sense, right?
Yeah.
That's why we intentionally say that, hey, like if you have no intention of doing more financially in your life than what you're doing, do not look into this. But if you're already working hard, putting in the time, maybe you might be on the like wrong vehicle.
Yeah.
And when you become a broker, things are very lucrative. Like I share my personal story with you. I was already working hard. I was
Yeah.
commuting from Pennsylvania at the time to New York City. It wasn't an effort problem, but it was an effort in an industry that's
Yes.
not growing. And I had a cap. Whereas from one deal I made 4,000, and from my next deal I made 10,000. For
Yes.
that 10,000, I would have to work like two months or so, right? And the same effort. So it's just what we tell people is like if you're already looking for a way out or grow exponentially, what you want to do is whether you do it with us or on your own, whatever, you got to stay close to the money. People who
Yeah.
make more money are the ones that who understand how money operates. And as a business loan broker, that allows you to see both sides of the game. People with money, lenders, why are they making those decisions? So I can model after them. People on the borrowers, what kind of businesses they're starting? Why do they need money? It
Yep.
gives you a perspective that you wouldn't get from your teacher, your family, your spouse, right? So it puts
Yes.
you right in the middle of what is happening because this is not a theoretical microeconomics economics class in high school and college. This is
Yep.
like real transactions that makes a difference on the other end, and you're making a cut out of that. I don't know of any other industry that would give you that kind of expertise unless you're a hedge fund or a VC firm and things
Yep.
like that. There's very little place that will teach you how money moves. Does that answer your question?
Yeah, it does. And also to dumb it down as much as really possible. I try to teach my co-host on this show, like, don't use the bank, either be the bank or own the bank.
Yes, amen
And
to
and the
that.
cool thing with what Oz is doing here, he is the bank. In the way that he doesn't need to do the boring part. He doesn't need to have a merchant account. He doesn't need to do like small cash transactions. Instead, he can be focused on having a smaller or bigger spread of lending and borrowing, which is the most
Mm-hmm.
lucrative part of the bank, what they do. So you can't, unlike the bank, make up money out of thin air. That's a disadvantage. So you need to raise the finance. But otherwise, alternative lending is like being the bank, the best part of it. So having said that, enough marketing about jumping into this space. If you even think about it, find someone who's done it before. I've been teaching this, also is teaching this. I'm not saying that you should work with any of us, but don't try to reinvent the wheel because
No.
in most countries all over the world, this can be super regulated, partly regulated, or you can find loopholes if you know what you're doing. So I found
Mm-hmm.
loopholes. I have been certified like similar like the SEC, but in the UK. Um, so you need to know the local rules so you don't end up in prison for trying to do a good business. I must say that as another little red flag to do your due diligence on your customers, but also on the industry as a whole. So yeah, you are also sharing stuff online. You have some ideas around YouTube. You've used it a lot more than I have. What have you learned from talking money on YouTube?
Yeah, that's YouTube was an accidental discovery for me. So before we started teaching the coaching, we
Yeah.
became a marketing agency helping brokers get leads, right? And
Yes.
a lot of the larger broker shops in New York, they're based in New York, they still follow this Wolf of Wall Street boiler room
Yeah.
ideology, like
Yeah.
put a bunch of dudes in the floor and have them smile and dial. And then I came into the industry saying, you don't have to have all these people. We can run online campaigns and I can bring you quality leads.
Yeah.
But the take rate was really, really resistance was really high because that's what they used to doing, right? So YouTube started as like a protest to those people. Like my first video that got watched by like 16,000 people, literally me pulling, this is 8 years ago, a
Yep.
whiteboard next to me, and I'm out of the picture myself showing here's why your funding business will fail. And it was like totally negative take on what will happen if you keep staying on that path.
Yep.
Your rent in New York City skyscraper is like 40,000. You're paying each person 50,000 a head. You have 20 of them. You're originating X amount of deals. Guess what? You're losing money, but
Yeah.
you don't have to say that. You don't want to say that you're raising capital. And this is, I broke down the whole thing. I'm like, whew, off my shoulders. And then it was crickets for a while. Then I noticed that a brand new group of people who are not even from the industry were like, what you're saying is interesting. You want to teach me how to do it. That wasn't even the intention, right? I was getting mad at the people that I'm like, wait, why do you want to learn this? Like, we just want to be just like what you're doing. Teach us the industry. That's when it took off. And then I changed my content basically, hey, showing results and how it is done to people, ignoring whoever is already in the industry unless they're willing to, listen. And then our primary way of doing content became through YouTube, and our videos do not get millions of views, but we don't want it. We want the people who are interested to listen to, the right ones. So I'm not a YouTuber per se, but I use it as a channel for people to do research on us, find out who it is that they're, like you said earlier, can you do this on your own through trial and error? Heck yeah, most people are smart enough to do it. But do you want to do that? No, you don't want to do it. Some trial and error mistakes can be really, really costly, more costly than you would imagine if you don't know what you're doing.
Yeah. So you've been, again, staying on the theme of YouTube, like paid traffic and buyer intent and trust. How does this correlate? So again, you're working in a niche where trust is super important.
Yes.
And it is high ticket, but per default, it's not just random consumption. So paid traffic in this space, how has this helped you, especially in the early days? Now it's too crowded, maybe.
Yeah, I think our approach, again, we found out by accident, is that many people do one or the other, right? They go all organic, want to grow the channel to 1 million followers, or they go all paid ads and you don't really find them anywhere else, right? So our approach was like, we're going to have some organic presence to the right people, very targeted, and we're going to support it with paid ads. I think that's how we got around not paying as much as other people who try to break into the industry. Many people have tried, because if you just go through paid ads, like you said, whenever you mention the word finance, there's very low trust and very high skepticism. They want to know who is this person,
and also very high ad click.
Cost per click is through the roof, because you're competing with like Bank of America's, TD banks, all the hedge funds, like, anything finance related. Those are the people with money. They can outbid you. So I think it was like finding our way into how do we do finance by coaching in a way and break into the business loan brokerage. So I can say that our organic content helped a lot. Even if person sees my ad once and they go, who is this weird looking guy? And they don't think of anything. Then all of a sudden they keep seeing the organic videos that provides reassurance. Oh, this is actually real. This guy's been around for a while. And anyone who's doing it, I suggest, I know it's not a shortcut, but you need to have organic presence, right? So you need to have some kind of, like, you have people talking good stuff about you. You need to show that, especially in this day and age with AI and stuff, everything will be a lot easier. But I think what will draw people to offer what you're offering will be the persona, whether that's the founder of the company or an employee of the company. That I don't think that will go anywhere. People want to work with people who they trust. Some people will like my face, some people will hate my face, but the fact that it is there will attract the right people. But if it is not there, then people complain about ad costs going through the roof. And our approach is like, yeah, no wonder, because once you stop the ads, you literally do not exist. Like no one knows that you're there.
Yeah, I could go on for 5 more hours easily. I feel at home in this space. So if you have to pick like the importance of 3 words here, so you got on one side how people find you. Is it urgency? Is it the education you provide, or is it proof of what you're doing actually makes sense?
I think people want to see the proof before they want to spend time on being educated. There's so much educational content. I think it's the proof that it works.
Cool, perfect. And often, like credit and money, usually people search with a sense of urgency, which is too late, which I hope is one of the core themes of this episode. Like, please try to be proactive.
Yes.
So the podcast name is Invest in You. What does investing in yourself mean to you?
I last year I traveled 13 times out of the 12 months.
Yeah.
It was to go on conferences, masterminds, and investing in. And I did this even when I didn't have the money, honestly, because I think that's like the hack to life, like
Yes.
finding people who figured out stuff. Oh, as much as we like to think how smart we are, you want to cut down. Our lifespan as Homo sapiens is very limited. You're gonna
Yeah,
pull what,
exactly.
70, 80 years. For if you have ambitious goals of being at the top 1%, I can tell you, you ain't doing it you're by yourself. Like there's just
Yep.
very short time period. Unless you're coming from generational wealth, your grandpa is a billionaire. It's very short time because the first 30 years you don't know what the hell you're doing. Like you're just trying to figure it out. The remaining 30 years is like you have a family. So it's just that you got to learn from other people. Like that's like a big mantra to me. Even if I take 1% out of an event, I better be there than sitting on my butt in my chair and hoping that I'm a big shot. It just doesn't work that way.
Yeah. So if you like to check out also the big shot here, where can people find you online? What's your
The easiest
favorite
place is
way?
our website, businesslendingblueprint.com. That directs you to our Instagram, YouTube. If you're not interested in working with us,
Yeah.
you can at least check out the free content. But if you do, then we ask you to schedule a call so you can check out what we do and see if it is a good fit.
That sounds like a plan for the people who would like to dig deeper. You got lots of info there. And you got also many episodes around this space. If you go back to the backlog, and also as already indicated, also got lots of specific content linked to this. So without further ado, thanks a million for listening in. And until the very end on this semi-technical episode, closing words for the world, please, also.
Financial literacy. Just look up the term, look for ways to learn it. Do not fall behind, because it's not just costing, it's probably costing the financial future of your kids and your family. I can't say that enough. Like, yeah, we promote the loan brokerage and stuff, but it comes down to understanding how money moves. And you can't just take your time on it. Whether you have a job or you're starting a business, you just got to understand, and do not demonize money. Do not listen to the wrong people.
Excellent. That's a wrap. Thanks, guys.